Hello and welcome back to Bunnex Investment Group. In this video, we are going to talk about a simple trading strategy that incorporates the 200 EMA. Any trader who can see can actually apply this in their trading. So basically, we'll be looking to sell at a particular point like this one so that we can have long sustained runs that can even be swinged for 3 days. If you are someone who wants to learn that, sit back, relax, and take some notes. Firstly, we are going to define the 200 EMA. So basically, the 200 EMA is an exponential moving average, an indicator that is found within our platforms for free. It is a technical analysis tool that can provide insight into a long-term trend of an asset. It might be Forex or even indices. Any tradable asset, you can use this particular indicator. It derives its calculation from the previous 200 days from the day of observation. So basically, what makes this EMA special? It is because a lot of retail traders, including me and you, use this EMA. Therefore, we see a lot of involvement of traders at this particular indicator zone. So if that is the case, it means even the market makers are also interested in taking their orders within this particular phase. So they actually use those zones as trap zones, as well as zones to induce traders in opposite direction they intend to take, and so forth. So knowing what to look for gives you a higher probability of success, and that is what we will talk within this video. So here's the step one to actually get an entry using the 200 EMA the right way. Whenever an H1 cycle completes, we expect a reset. So by cycle, we say if there are 3 days that have flown, have a flow in one unilateral direction, like in this particular case, level 1, level 2, and level 3 like this, we would expect to see the market give us a reset and continue. However, this cycle must be bundled with the primer and the 200 EMA crossover. The primer that we are referring to is the 50 EMA. Therefore, we are saying the 200 EMA will not be efficient without an assisting EMA, which is the 50 EMA. Therefore, a completed cycle plus a 50-200 EMA cross is the first step of the strategy. This can be easily explained with the illustration below. So we are saying after 3 levels in one direction, or basically a cycle that is completed, we now wait for we need a 50-200 EMA cross bundled with this. So we are saying the first step is this one plus this one, and then we move over to the next step. So step 2, after the above step has been fulfilled, the next step is to see a pattern creation at the 200 EMA. However, this pattern will require some sophisticated understanding of how the market makers trip. This will be a peak and retest tomorrow. This is actually a nickname, peak and retest tomorrow. It means we are actually hitting the 200 EMA or just piercing throughout below the 200 EMA, and then we need to retest on the following day or even on the 3rd day like that. This is the so-called yesterday retest entry. When they come to this price, that is where we need to see a candlestick reversal pattern, as illustrated in the market examples. But before we see examples, please note that we have a free Telegram channel where we share free setups, signals, and trading tips. Be sure to join that community using the link that I've left in the description box below. Alright, so we are going to use euro against dollar, the most traded asset, and I am going to illustrate the exact way of what we were talking about. In this particular case, there was a 250 EMA cross that was issued at this particular point, and we've said we need to see 3 levels to the downside. We had 1, we had 2, we had 3. After 3 levels, we wanted to see a retest of the 200 EMA and then trading off yesterday's high. So this is where we wanted to see a trade. Unfortunately, the market retested this in Asia and later went against that in London. We always try to avoid trading in Asia in our explanations. So from there, we can now see again there was a completed cycle. We've said after a completed cycle, we expect to see a reset or a cycle continuation point. This was level 2 and this was level 3. So there were 3 days of drop in one unilateral direction, and then after that we can see the market pulling back to the 200 EMA, giving us the point of reference. From that point of reference, we actually saw the market coming back to retest the same particular point. We can continue again to count. We can see that there was another cycle that started. We had 1, 2, second drop, and then we had the third drop like this. Then after that, the market came back to the 200 EMA and our entry at yesterday's high. You can see this is where we were going to make our entry. So basically that is what we will be waiting for. In some cases the market will not give us a proper entry, but in this case we can see there was 1, 2, 3 and then retest of the 200 EMA, then pick and retest tomorrow is the motto for this strategy, and then we can see the market coming back to retest yesterday's high like that, and it went the rightful direction we wanted. So basically that is what we'll be looking for. We've said a completed cycle plus a 250 EMA cross, then retest of the 200, retest of yesterday's high or low, we enter, and that's it. Basically like that. On that note, we've come to the end of our today's video. Thank you for watching. Like and subscribe, and I'll see you.